Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today, and one of the most important videos any of you will ever hear from me for this specific bull run. We are going to be so filthy stinking rich when it's all said and done. All we have to do is execute and not be emotional. All we have to do is take profits on the way up. The best way to learn how to take profits is by having exit targets for all the coins you're invested in. That is something we review in my mentorship program, and that's down in the description below as we get a more in-depth and intimate community setting. In addition, the metaverse and NFTs, in my opinion, will be a monstrosity of a space. We have plenty of people discussing how NFTs could be bigger than the crypto industry. I don't necessarily agree, but NFTs will be massive. This NFT mania that's happening right now reminds me of the ICO craze in 2017, and I believe there's still plenty of money to be made. NFTs and the metaverse are going to be powerful. Right now, Facebook has created a new niche of coins and metaverse tokens that will be exploding. In my last video, I told all of you I had a powerful metaverse trade. I posted that on OnlyFans down in the description below. And now I have another metaverse coin that I'm releasing to all of you in OnlyFans as well. And I highly recommend you all take a look, as that's going to be an explosive niche in the days, weeks, and months to come during this bull run. We see that Bitcoin is currently at $68,000, Ether exploding to $4,800. There's still plenty of room left to run. The total crypto market cap is approaching that $3 trillion mark. Everything is bullish. Everything is going up. Plenty of our favorite altcoins are going to the moon and beyond. Our precious XRP is even moving as well. What a sight to behold. But what this means to me is, now we have to start planning for what happens after the bull run. Now guys, this is very important because as I was recording this video, we saw a massive market decline. 3% and 2% respectively for Bitcoin and Ether. And altcoins are tanking very quickly at a much higher scale as well. This is not a bear market. In my opinion, this is hardly a correction. But people, their psychological temperament on Twitter has made a complete 180. And that's something I see far too often. That signals to me that those people are going to lose. This volatility is all part of the game. And if you can't handle 5 to 10% corrections, you don't deserve the 1,000 to 10,000x returns. That's simply the name of the game. That's what happens in crypto. And I've seen it happen time and time and time and time again. Don't limit yourself because you're emotionally unstable. We have this from Nick Crypto Crusader at Ncash Official stating, who got scared today when Bitcoin corrected perfectly to the 0.702. I know I didn't. This is just part of the game, and it's much bigger than you think. We're about to go to the moon and beyond. I 100% agree. This was us correcting a little bit for the final takeoff to the moon. And over here, when we take a look at this from TechDev, we can see that relative to 2013 and 2017, showing the potential of where Bitcoin can go if history repeats itself. I don't necessarily agree with how high Bitcoin can go. We have some conservative projections of $75,000 to $80,000 for Bitcoin. I personally think $100,000 is on the table, but there are others that believe we could hit 120 to 200K this bull run. Regardless, Bitcoin will run first. It is the leader of the space. It is the king of crypto. All Bitcoin's price will mean for you is it'll let you know how high the rest of this market will go. If Bitcoin only goes between 75 to 80K, it'll be a more suppressed altcoin season. But if it hits the higher 100 to 150K targets that some people are projecting, then good lord, the most explosive altcoin season in the history of mankind will make so many millionaires, it will be laughable. Brace for the bull run. But now, I'm going to help you all brace for the 70 to 80% correction that will, without a shadow of a doubt, happen immediately after, because we are in a bubble and there is plenty of BS going on in crypto. You have to stay grounded because on the way up, you make money from profiting. And you make even more money on the way down when you buy high quality blue chip digital assets at suppressed prices. This is why it's going to happen. It's going to happen because of Evergrande. Evergrande has defaulted on $148 million. Bankruptcy proceedings have begun. And what I want to say to all of you is, holy shit. Evergrande will not just affect the crypto space, but it will affect global markets. One thing I've been looking into is something very, very ominous about the connection between Evergrande and Tether. Tether and Evergrande seem to be very connected with all of this going on. And I'll briefly show you why after I present you with this information. First, we see from Gold Telegraph that the Federal Reserve warns risky asset prices are rising, adding to crash worries. The Federal Reserve also warns stablecoins pose an emerging threat, that fragility in China's commercial real estate sector could spread to the United States. Very interesting connection here, wouldn't you say, between these two posts and between various other videos that I've seen in the past. Now, in my opinion, this report on stablecoins by the President's Working Group on Financial Markets, the FDIC, and the Office of the Comptroller of the Currency was very telling. I'm not going to go through all of it, but I just want to show you. A couple things I noticed were specifically digital asset trading platforms and DeFi, meaning exchanges and DeFi, and then risks and regulatory gaps, loss of value, risk to stablecoin users and stablecoin runs, payment system risks, risks of scale, systemic risks and concentration of economic power, and regulatory gaps. The reason I'm not going through all of these bullet points is because I could quite literally make a 7-hour video talking about it. Just use the titles of the table of contents to try and put together what I'm getting at here. Systemic risk is the name of the game, and I think Tether is posing a systemic risk due to its connection to Evergrande. I've heard about this in the past, but I got serious confirmation from a few different sources, both this week and today specifically, that I trust. Now let me get into a clip that I believe will help shed light into what's going on in the background.
The other day alone, it was rumored that Evergrande was about to be soft nationalized. Then, just a few hours later, new rumors emerged, suggesting that Evergrande was about to be left to fail. We do now think that Chinese currency bonds are going to be repaid, but it seems like the CCP will allow US dollar debts to be ignored with no consequence. And the big one in my mind, the one that really came out of left field, that sounded ridiculous at first, is the connection between Evergrande, the Chinese property market, and Tether, the cryptocurrency stablecoin. Now I know that at first a link between Evergrande and crypto might not seem very plausible, but the evidence is starting to mount, and a theory has started to develop. Basically, it's possible that Tether, and by proxy, the entire crypto market, has been providing backdoor financing to the property sector in China. And that's what we're going to discuss today, this supposed link between the two markets and what it could mean for crypto in the coming months. But first, really quickly, make sure to like this video and subscribe to the channel. We're putting out loads of content just like this constantly that you don't want to miss out on. At this point, most people know what's going on with Tether and their potential fraud. But for anyone who doesn't know, it's really not too complicated. Basically, Tether or USDT is a stablecoin or a cryptocurrency that tracks the value of the US dollar. It exists because it's easier to exchange one crypto for another than to trade one crypto for a dollar. As a result of this, stablecoins provide much needed liquidity to the crypto markets, and Tether or USDT is the largest stablecoin in the world. As of right now, there are $68 billion of USDT in circulation, so it is by no means a small fish. Now, in order to ensure that one USDT is always worth $1 US, Tether claimed that each coin was backed by a physical US dollar in an account held by them, which would allow them to buy back every single coin if needed. Over the last year, however, it has emerged that this was a lie. The US Department of Justice started investigating Tether and basically found out that it wasn't backed by US dollars as they had claimed. Nowadays, Tether claim that each USDT is backed by US dollars or cash equivalents, or from time to time, receivables from loans made to third parties. Basically, they now decide what they back USDT with, and they admit to sometimes using other assets. Most recently, they've claimed that 50% of USDT is backed by commercial papers, which can be thought of as short-term company bonds. In short, anyone who knows anything about crypto considers Tether and USDT to be a huge scam, because they are literally printing their own money based on the illusion of it being backed 100% by dollars, when in reality it isn't. The way Tether get around all the legal problems that their lying would cause is by simply refusing to address anything that they can't outright deny. They make statements about anything positive about their business and just pretend that the problems don't exist. Now, when we heard that 50% of Tether's reserves were commercial papers, pretty much everyone just assumed that it was some sort of loan between Tether and the exchanges or Bitfinex. But more recently, Tether have come out and emphatically denied this. Now, the question is, what are those commercial papers? Well, Tether have told us that the commercial papers are real, that they are all AA rated, but they have refused to state whether or not any or even all of it is Chinese. Now, with the way Tether operate and with the state of the corporate bond market in China, we pretty much know for sure that if the commercial papers weren't Chinese, they would have said so. We can also assume that if the commercial papers were from a reputable and stable bank like HSBC, that they would be quick to say that as well. So it's very likely that this debt isn't from as reputable a source as Tether would like you to think. We also know that these commercial papers are not coming from the US or Europe. The reasons for this are a little complicated, but basically $30 billion is a lot of money, and no one has been buying commercial papers by that quantity over here. It also recently emerged that the Chinese property developers have been using commercial papers and shell companies as backdoor loans to finance their operations after the 3 red line policy was introduced by the CCP, which basically stopped developers from being able to take out more debt. In 2020 alone, over $500 billion in commercial papers was issued by Chinese property developers. Now, usually, commercial papers aren't a great source of interest, and you're probably going to be looking at a return close to 0.01% a year. For someone with $30 billion worth of assets like Tether, that's a measly $3 million a year, and for Tether, that just wouldn't be worth the risk. But if a company were in trouble, say the government of the country they operated in wouldn't let them release any corporate bonds and they needed more cash to finish their projects, they would probably be willing to pay far higher interest rates, and they'd be willing to work with less than reputable companies. So which possible industry in the developing world could need $30 billion and is also willing to work with a company like Tether, who is widely regarded as being guilty of fraud and has practically no positive reputation? Well, the idea that Tether has been providing backdoor financing to the Chinese property market is starting to sound a little more plausible now.
Ladies and gentlemen, I personally thought it was funny when he stated HSBC was a credible bank. We know all these banks are corrupt. I know the point he was making, but it was just funny to me. Regardless, please go give my friend Stoic Finance a follow, as he's been dishing out some fire content over the past few months. Now, I usually don't play videos from other people for that long, but it was so important as to the future of where this market is going to go. Please do not twist what I'm saying. I believe right now we are currently in a full-fledged bull market, the most explosive altcoin season we will all ever experience to date. We are also experiencing an NFT craze. Compound that with Facebook's metaverse. We're going to be in a metaverse crypto craze. And that's why I'm posting metaverse cryptos in my trading section of my OnlyFans. We're going to be able to ride this wave to the moon. But we have to be able to project into the future as to how this is going to end. This is going to end badly. Regulators are preparing to bring the hammer down on things like this, dropping hints, releasing documents, letting you know it's going to end. But in the meantime, the Tether printer is continuing to go burr. The unregulated central bank for crypto has minted 3 billion USDT in the first week of November. Bitcoin is rising, and this is a signal to the crypto space that prices will continue to explode. We're gonna have to ride this wave into infinity and then watch it crash 70+%. The real savages in this space will take advantage, and unfortunately, the retail investors are going to get hurt. The latecomers are going to get hurt. It's interesting because when Doge goes to the moon, when Shiba goes to the moon, I bet all of you can testify to this. Friends and loved ones that aren't big into crypto finally want to buy. Then, when other things begin to crash, they want to sell. They're always the last people to get involved. In addition, something that all of you need to know. US retail investors are the exit liquidity for institutions, Asia, and Europe. Do you ever wonder why certain people, certain US jurisdictions cannot sign up to certain exchanges? Oh, it's because of the laws, right? Nonsense. These unfriendly crypto laws make it so that retail investors cannot purchase cryptos before they go up 10 to 20x. For example, an individual like myself that was able to purchase crypto on KuCoin, like Quant at $7, is at an advantage relative to somebody that had to wait for Quant to get to $70 on Coinbase. Once something gets listed on Coinbase, the truly generational returns are gone. Cardano was listed on Coinbase at $1. I got it at 3 cents. Again and again and again. The unsuspecting US retail investor gets screwed. US retail investors are the exit liquidity for the rest of the world. All these other jurisdictions are more friendly to crypto, but supposedly the most powerful and financially sovereign state on the planet, they can't get it together. I think it's on purpose. The transfer of power from west to east is happening now. The United States is coming back to the mean as the rest of the world is rising. And it's going hand in hand with the fall of the US dollar. The US dollar will no longer be the world's reserve currency. Plenty of people believe that'll be XRP. But we still have to wait and see. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. We're getting ready for this massive bull run. We're getting ready for this massive correction. We're getting ready for generational wealth. And that's because we're all contrarian investors. Now guys, I'll be back tomorrow with another video.
I get 24 hours a day just like Bill Gates. I get 24 hours a day just like Beyonce and Jay-Z. You get 24 hours a day, ladies and gentlemen. What do you do with your 24 hours? You need to get more information. In our coaching program, all we do is drop content nonstop. And people are like, wow, I didn't know that. Wow, I didn't know that. See, you don't even know what you don't know. How did you let me come from behind and clip you? Do you guys know the studies show the better we look, the more money we make? Which means your website should pass the eyeball test. Your truck should pass the eyeball test. Your people should pass the eyeball test. You should pass the eyeball test. Everybody in this room has a promised land somewhere, but you can't be stuck on the city you like. You got to hear God and go to your promised land. Your promised land might be Utah. Your promised land might be Minnesota. Your promised land might be Wyoming. Hear me clearly. You better use your money to get information and access, and you better be flexible, because a real shark is flexible. Can we stop fronting and get real about this thing? And if I can do it, you can do it. I knew nothing about life. I knew nothing about business, but I had the right mindset, and I learned it through sports. And y'all got to hear my story so you understand. I didn't even start on my college basketball team. I came off the bench. At the University of Minnesota, I came off the bench. But in my mind, you can bring me off the bench, but I'm an NBA ball player when you get through talking. When you get through, I'm an NBA ball player. And that's why I would walk around and say, you can't check me. You can't check me. You can't check me. If I was you, I would walk around every day and say, I'm a millionaire. I'm a millionaire. I declare it right now. I'm worth millions. I'm worth millions. I will receive my salary right now, but I won't accept it as my value. So whatever you receive right now, receive it, but don't you accept it as your value. Because there's more out here for you if you change your mindset.